In 1815, one man knew the outcome of the Battle of Waterloo before the British government did, and he used that information to execute a single trade that made him the wealthiest person in Europe. His name was Nathan Rothschild. The banking architecture his family built over the next 50 years, central banks, sovereign debt markets, war finance, is the exact system extracting wealth from your paycheck right now in 2025. Your mortgage payments, the national debt, your taxes service, the interest rates controlling your purchasing power, the Federal Reserve creating dollars out of nothing. Every single mechanism traces back to a model perfected by five brothers operating across 5 European capitals 2 centuries ago. If you want to understand how modern finance actually works, who built it, why it extracts wealth upward, and how it became inescapable, subscribe to the Econaut, because we decode the financial architecture most people never see. The Rothschild story isn't conspiracy theory, but documented financial history, and understanding how they built the system shows you exactly how the system operates today. Frankfurt, 1744. Meyer Amschel Rothschild was born into the Jewish ghetto on Judengasse, Jew Street, where Jews in Frankfurt faced severe restrictions, including no land ownership and exclusion from most professions, though money changing was permitted. Meyer's father ran a small coin-dealing operation, and when he died, 13-year-old Meyer inherited the business, which wasn't prestigious banking, but buying and selling old coins. But Meyer understood something that would reshape global finance. Whoever controls money creation controls everything that money can buy, with land, armies, and governments, all secondary to the power of creating currency itself. By 1769, Meyer had become court agent to Prince William of Hanau, one of Europe's wealthiest royals whose fortune came from renting Hessian soldiers as mercenaries to other kingdoms. Meyer managed the payment flows and collected commissions on every transaction, but his real innovation wasn't serving one prince. It was what he did with his sons. Meyer had 5 sons: Amschel, Salomon, Nathan, Karl, and James. And in the early 1800s, he deployed them strategically across Europe's financial capitals. Amschel remained in Frankfurt while Salomon went to Vienna, Nathan to London, Karl to Naples, and James to Paris. 1 family, 5 cities, 1 coordinated intelligence network. Each son operated as an independent banker in his respective city while building trust with local elites. But behind the scenes, all 5 brothers shared information, instantly coordinated strategy seamlessly, and moved capital across borders faster than any government could track. They had created the first truly international banking network and used it to finance both sides of every major war simultaneously. The Napoleonic Wars from 1803 to 1815 were the crucible that forged Rothschild dominance, as every European power needed enormous sums to field armies. France, Britain, Austria, Prussia, Russia, all desperate for capital. The Rothschilds provided it to everyone, with Nathan in London financing British military operations, James in Paris helping fund Napoleon's campaigns, and Salomon in Vienna backing Austrian forces. The family didn't care about ideology or national allegiance, but cared about one thing: being the creditor when the fighting stopped, because wars end, but debt is permanent. When Britain needed to pay troops fighting on the European continent and physically shipping gold across enemy territory was impossible, Nathan Rothschild extended credit to the British government in London, while his brothers in Europe paid British soldiers in local currency from Rothschild banks operating in those countries. The gold never moved, as the Rothschilds simply balanced ledgers between family branches, which made them irreplaceable to every government waging war, since armies couldn't be paid without Rothschild credit networks. And the Rothschilds charged interest on every transaction flowing through their system. But the real fortune, the trade that made them legends, happened in a single day, on June 18, 1815, at Waterloo. Napoleon versus Wellington in a battle that would determine Europe's future for a generation, where if Napoleon won, French bonds would surge and British bonds would collapse, while if Wellington won, the opposite would occur. Nathan Rothschild, operating from London, maintained a private intelligence network superior to any government's, using carrier pigeons, fast ships, and paid informants across the continent. When the battle ended, Nathan received confirmation of Wellington's victory before the British government knew. But instead of immediately buying British bonds, Nathan did something counterintuitive. He started selling them aggressively and publicly. Other traders saw Nathan Rothschild dumping British bonds and panicked, assuming he had insider intelligence that Britain lost, so the selling accelerated and British bond prices collapsed. Then, when prices reached absolute bottom, Nathan reversed course and bought everything, massive quantities at catastrophically low prices. And hours later, when official news arrived that Wellington had won, British bonds exploded upward. Nathan Rothschild had executed the most profitable single trade in recorded history, with reportedly a 20-fold return in one day, which accomplished two things. It made the Rothschilds the wealthiest family in Europe overnight and demonstrated their power to every government on the continent. They possessed better information than sovereign intelligence services, could move markets with a single order, and weren't just bankers anymore. They were kingmakers. After Waterloo, the Rothschilds became the primary creditors to nearly every major European government, with France, Austria, Prussia, and Britain all owing them billions. And debt creates leverage. Governments that depend on you to refinance their obligations cannot oppose you since they need you to arrange new loans when old ones mature, so the Rothschilds hadn't conquered Europe with military force but conquered it with bonds quietly and almost invisibly. But Mayer's sons understood something deeper than just lending existing money to governments. The real power was controlling the creation of money itself, and that meant controlling central banks. In 1694, England established the Bank of England as the first modern central bank, structured as a private institution owned by shareholders, but holding a government charter granting it monopoly power to print British currency. The model was elegantly simple. The government borrows money from the central bank, which creates that money from nothing and charges interest, while the government repays the loan using tax revenue. But because the bank charges interest, the government can never fully repay the principal, so the debt grows perpetually, and the central bank profits perpetually. The Rothschilds didn't invent the Bank of England, but Nathan became one of its largest shareholders in the early 1800s, and once the family understood the model, they replicated it across Europe. James Rothschild became a major shareholder in the Banque de France. Salomon established deep relationships with Austria's National Bank, and Karl financed banking institutions in Naples. The pattern repeated everywhere. Gain influence over the institution that creates a nation's currency. Not the government, but the bank, because governments borrow while banks create. The Federal Reserve, established in 1913, operates on the identical model as a private institution owned by member banks, some of which descend from Rothschild banking networks through mergers and acquisitions over the past century. The Fed creates dollars digitally and lends them to the US government at interest, and since the US government cannot print its own money interest-free, because the Federal Reserve holds a legal monopoly on dollar creation, the government borrows from the Fed, pays interest on that borrowing, and that interest becomes profit for the Fed's member banks. This is the Rothschild system, a private central bank with government-granted monopoly on currency creation, lending to the government at interest, creating debt that mathematically cannot be repaid. It's been replicated in every developed economy, including the European Central Bank, the Bank of Japan, and the Bank of England. All private or quasi-private institutions with monopolies on currency creation, all lending to governments at interest, all using the blueprint developed in the early 1800s. Most family fortunes evaporate within 3 generations as the founder builds, the children maintain, and the grandchildren squander. But the Rothschilds engineered a system where wealth compounds across centuries. The mechanism involves strategic intermarriage, legal trusts, and ironclad inheritance rules, with Rothschilds marrying other Rothschilds almost exclusively for over a century. Nathan's sons married Salomon's daughters, while Karl's daughters married James's sons. This kept wealth concentrated within the family bloodline, with no dilution and no outsiders, while they also structured their holdings through trusts that distributed wealth across generations while avoiding taxation. When Meyer Amschel died in 1812, his will contained specific provisions. Only male heirs could manage the family banks. All wealth would be held collectively in trusts rather than individually, and no public accounting of family wealth would ever be disclosed. This meant governments couldn't tax wealth they couldn't measure. Heirs couldn't squander wealth they didn't individually control. And the family operated as a single financial entity across multiple jurisdictions, making national regulation impossible. Third, they diversified massively beyond banking by financing railroad construction across Europe, owning mining operations in Africa and South America, funding the Suez Canal, and controlling vineyard estates in France. By the late 1800s, Rothschild banks had financed over half of all global railroad development, while holding significant stakes in De Beers diamonds, Rio Tinto mining, and countless industrial ventures. This wasn't diversification for risk management, but vertical integration. They controlled the banks that financed the industries that generated the profits that flowed back to the banks. When your government runs a budget deficit, it issues bonds to cover the shortfall, and the central bank purchases those bonds by creating new money digitally, which means your government now owes the central bank the principal amount plus interest. Where does the government get money to pay that interest? From your taxes, so you work, earn income, and pay taxes, while a portion of those taxes flows directly to pay interest on money that was created from nothing. You're not paying for government services with that portion, but paying interest to bondholders. And those bondholders include the institutional descendants of banking families that have held sovereign debt for 250 years. In 2025, U.S. national debt stands at $39 trillion, while annual interest payments have reached $1.2 trillion and are rising rapidly. That's more than the entire defense budget. That $1.2 trillion doesn't fund schools or build infrastructure, but pays interest to bondholders, including central banks, foreign governments, institutional investors, and private banking families that have been in the sovereign debt business since the Napoleonic Wars. Governments borrow perpetually, interest compounds perpetually, and you pay perpetually. But here's where the Rothschild model becomes truly brilliant: invisibility. Because after the late 1800s, the Rothschilds systematically withdrew from public visibility. They stopped publishing wealth estimates and stopped putting their name on every venture, while other banking dynasties like the Morgans and Rockefellers became the public face of finance. But the Rothschilds remained embedded in the system's foundation. They became shareholders instead of CEOs, partners instead of presidents, and advisors instead of publicly acknowledged owners. Which is why today estimating Rothschild wealth is nearly impossible. Public estimates range wildly from $400 billion to over $2 trillion, depending on how you account for family trusts, foundations, and diffused holdings. But the real number is unknowable by design. Family banks are private, trusts are offshore, and holdings are distributed across hundreds of entities spanning multiple jurisdictions. This isn't tax evasion, but structural design. Visible wealth attracts regulation, taxation, and public scrutiny, while invisible wealth compounds quietly across centuries. Rothschild & Co., headquartered in Paris, remains one of the world's largest independent financial advisory firms, advising governments on privatization programs, sovereign debt restructuring, and major mergers. They don't make headlines or seek attention, but they're embedded at the highest levels of global finance, including European Central Bank policy discussions, IMF restructuring programs, and sovereign debt negotiations, where Rothschild advisors are present not as visible leaders, but as indispensable technical experts. The system no longer requires Rothschild control to function because the system is self-perpetuating, with central banks existing in every developed country, sovereign debt forming the foundation of every government's fiscal structure, and interest-bearing currency being universal. The Rothschilds built the architecture, but the architecture now runs itself. You do not need Rothschild family members running the Federal Reserve for the Fed to operate exactly as Nathan Rothschild designed central banking to function in 1815. The system is the legacy, not the family. BlackRock and Vanguard collectively manage over $20 trillion in assets and own significant stakes in every major bank, every major corporation, and every major industry. They are the modern Rothschilds, not by bloodline, but by methodology. Distributed power, centralized control, invisible ownership structures, multi-generational wealth accumulation, and embedded so deeply in the financial system that regulation becomes nearly impossible. Larry Fink at BlackRock operates exactly as Nathan Rothschild operated in London 2 centuries ago. Because he doesn't need to own everything outright, but just needs to be the advisor, the creditor, the indispensable intermediary. The Rothschilds taught the world this model, while BlackRock perfected it. The Rothschilds are the subject of more conspiracy theories than perhaps any family in history, with claims they control the weather, orchestrate every war, run the Illuminati, and worship dark forces. But this is nonsense, dangerous nonsense, because it obscures the real system with fantasy. The Rothschilds didn't need secret societies because they had banking networks, and they didn't need occult power because they had compound interest. While the conspiracy theories make them seem supernatural, even though the reality is simpler and more instructive, they just understood money better than anyone else on the planet. The real Rothschild power came from three things: information, credit access, and multi-generational patience, as they maintained intelligence networks superior to governments, provided credit when no one else could, and planned across centuries while competitors chased quarterly returns. That's not magic, but method. And the method is now embedded in every financial system on Earth. War is the most profitable business in human history, not because of weapon sales, though that's lucrative, but because war creates sovereign debt on a massive scale. Governments borrow enormous sums to fund military operations and promise to repay after victory. But wars are expensive, and the debt never gets fully repaid. It gets refinanced, rolled over, and extended indefinitely, while creditors collect interest indefinitely. World War I created $200 billion in new sovereign debt. World War II generated $2 trillion. The Cold War added $10 trillion. And the War on Terror has created over $8 trillion in US debt alone. Every war increases global debt, and every increase benefits bondholders, which is why the Rothschilds financed the Napoleonic Wars, the Crimean War, and the Franco-Prussian War. They profited from all of them, not because they wanted war, but because they understood that governments at war will pay any interest rate to access credit. Today, the US spends $1.2 trillion annually just on interest payments, and that number will climb toward $2 trillion by 2030 as older debt refinances at higher rates. That's $2 trillion per year flowing from taxpayers to bondholders.
Central banks, sovereign wealth funds, and institutional investors using the same sovereign debt model the Rothschilds codified 2 centuries ago. The central bank model creates a structural impossibility. When a central bank creates $100 and lends it to the government at 5% interest, the government owes $105, but only $100 exists in the entire monetary system. The additional $5 can only come from new borrowing, so the government must borrow $105 to repay $105, but now it owes $110.25 with the next interest cycle. The debt grows exponentially forever, and repayment is mathematically impossible. This isn't a flaw, but the design. Permanent debt means permanent interest payments, and permanent interest payments mean permanent wealth transfer from taxpayers to creditors. The Rothschilds didn't invent this mechanism since the Bank of England established it in 1694, but the Rothschilds perfected it, spread it globally, and embedded it into every major economy. They understood that a government controlling its own money supply is dangerous to creditors, but a government forced to borrow its money supply from a private central bank becomes a permanent debtor, and debtors are controllable. In 1815, Nathan Rothschild reportedly said, "I care not what puppet is placed upon the throne of England to rule the empire on which the sun never sets. The man who controls Britain's money supply controls the British Empire, and I control Britain's money supply." He wasn't boasting, but stating a documented fact that remains true today because whoever controls money creation controls everything downstream. Elections, politicians, and policies are all secondary to the power of currency creation. The Federal Reserve controls the U.S. money supply, the ECB controls the euro, and the Bank of Japan controls the yen. These aren't government agencies in the traditional sense, but private or quasi-private institutions using the model Nathan Rothschild helped establish in 1815. And Rothschild family wealth remains embedded in these systems through shareholdings, advisory positions, and institutional relationships spanning 2.5 centuries. So what do you actually do when you understand this? You have 3 options. Option 1 is to accept it and understand that central banking and sovereign debt are core features of modern finance, not bugs, since the system provides liquidity, credit, and relative stability even though it extracts wealth through interest while preventing the chaotic boom-bust cycles of the 1800s. Use the system's tools to your advantage, including mortgages, credit, and investments in productive assets. Option 2 is to resist it by supporting political movements to audit or abolish the Federal Reserve, buying Bitcoin, gold, and silver as alternatives to central bank currencies, minimizing debt exposure, and voting for fiscal responsibility. Make the system's extraction mechanisms visible and fight them through democratic processes. Option 3 is to understand it and position accordingly, because if you cannot escape the system, you might as well benefit from it. Own the assets the system favors, including government bonds, bank stocks, and companies that thrive on cheap credit. And if the system systematically transfers wealth from debtors to creditors, position yourself as a creditor rather than a debtor. This isn't moral endorsement, but pattern recognition. The Rothschild system has concentrated wealth for 250 years through sovereign debt and central banking, and it will continue because it's embedded in every government's fiscal structure and every central bank's charter. The Rothschild family still exists, still influential and still wealthy beyond public measurement, but they're no longer the public face of global finance because they don't need to be. They built a system that runs without them, a system where governments borrow perpetually, central banks create money perpetually, and interest compounds perpetually. A system where war generates debt, debt creates dependency, and dependency creates control. Mayer Amschel Rothschild died in 1812, but his 5 sons built an empire that fundamentally shaped the architecture of modern finance, with Nathan dying in 1836 and James in 1868. But their banking networks evolved into the central banks, investment firms, and sovereign debt markets controlling tens of trillions today, while the family name faded from daily headlines even as the system they built became the invisible foundation of global finance. The Rothschilds proved that the ultimate power isn't owning land or commanding armies, but controlling money creation and sovereign debt, because governments rise and fall, armies conquer and retreat, but debt is permanent, and whoever holds the debt holds the power. You cannot escape the Rothschild system because every dollar in your wallet exists because a central bank created it. Every tax payment you make services debt created through this system, and every interest payment you make flows into financial architecture the Rothschilds helped engineer 250 years ago. You live inside the structure they built, and the structure remains invisible until you learn to see it. If this video revealed a system you'd never seen before, if you understand now that the financial mechanisms controlling your economic life were architected by one family across 5 European capitals in the early 1800s, subscribe to the Econaut, because seeing the system is the first step. You cannot escape the Rothschild banking model, but you can understand it, and understanding it changes everything.